Okay, we back once again. We're going to go over these T levels one more time, just in a context of the last 5 trading days. And I just want to kind of show you guys sort of the trades that you could essentially develop a system around just using this one indicator. And obviously, there can be a lot more you put into developing a trading system using any indicator. Just to show you how simple it would be just with this one indicator, how you could come into something like micro e-mini and take some really good trades off of it. So the first thing we're going to talk about is going to be the line in the sand level. So I'm going to shut these off here, these extensions, because we're going to just look at the basic part of it. So these are the last 5 trading days. I'm going to talk about sort of these markups here a little bit, but the main line is going to be our pivot point. Okay, this pivot point, this 37.05 for Monday, ended up being a pretty good resistance and kind of sort of a bias line for the day. Now, obviously, trading is not really one-dimensional where you can just go, well, look, if we're below a line on the chart, then it's a bearish day, or we're above it. But you want to use it sort of like a pivot point. It's going to be a major support resistance. And you can see where there were a lot of trades to be had off of this. Now, not saying you're going to make these trades live. It's easy to look back and go, well, we could have just done all these arrows and made a lot of money. But, these are just essentially to show you an example of how the lines were worked. The lines worked, how many times they're tagged, how many times you could have bought the dip on them or sold the breakdown. That's the whole point of doing this. And you guys, everybody out there, if you're using this, you're going to come up with your own way of doing this. I mean, some folks are going to like playing this kind of thing where you're playing the double top. Some folks will just, they're getting out here. So some traders are going to be getting out here because they bought here. And then some traders are going to be like, they've been waiting for the sell because they're super bearish. So they're here and they want this trade. This is my type of trade because it's got the meat on it, right? But this trade is a little bit harder for me personally. But some traders are going to have a better time playing the upside because of whatever reason. It doesn't. So my point is, you're not taking all these trades. This trade, I missed this entire trade. Just because I was bearish and I was hoping for a break lower. So obviously you're going to make mistakes with this thing. But looking back, kind of with an objective lens, a little bit more clarity, or you're not in the middle of the trading week and all this stuff. There's not news being thrown at you, nukes, Bank of England, Biden showing up on TV randomly. You got hurricanes, all that kind of stuff comes into play and messes with you when you're looking at it. When you just look back, I mean, it's so easy to go, man, what the heck was I doing? Why wasn't I just buying here? So that's another reason I'm doing this. The next part is the gray zone. So you can see each day has a gray zone, and it's sort of like you got a target 1 and 2 based off this pivot line. So it's always an equidistant both sides. All the lines are going to be equidistant from that middle line. So that's why it's so important as well, because you're just looking at extensions. If you're a trader who plays initial balance or orb breakouts, opening range breakouts, that kind of stuff, your targets are essentially going to be 50% away from the opening range breakout or the initial balance, and then you got 100% away, you got 150% away. Those levels are going to come into play, and that's sort of what this is too, where you've got this initial range based off the pivot, and those are going to also act as support and resistance. You can see how many times this broke down and hit the the next level lower, but you can see there were 2 bounces off of that. You can see how this acted sort of as a consolidation here. In my whole point of showing you this is just look how many times it's acted as support. And this is a line. These are the lines that just show up on your chart automatically. It's not like you have to, and if you ever watch my videos, I'm always talking about just making your life easier. When I do my ticker on videos or whatever, you guys should see what I have to do when I'm doing GEX analysis. I've got a whole notebook full of stuff where I'm looking through it and trying to just make sense of it. Nothing. That's definitely not easier than trying to just trade off of this. There's no moving averages here. All we're using is a Heikin-Ashi candle and then, some simple lines. Look how many times it gets touched. Another bounce here. Then you got the target 2 to the upside, ends up being the double top. And then you got a move back through the line of the sand and then right into the target the gray zone low here. Couldn't break that. Probably too late in the day for puts, essentially. They couldn't make it down to the target 1. All right, we got line in the sand again. Breaks down, breaks the gray zone low, and goes right for target number 1 below. And then tries to make its way back up. It does a little kind of stop run probably, breaks lower. It can't quite break this target 1 low, but then it finally makes its way down to where? I didn't draw these lines manually. This line was already here. Makes almost to the tick, pretty much right to the tick of the target number 2, and then a massive rip. And this massive rip came off the Bank of England, news. Everybody was super mega bearish. All of a sudden, they just squeezed everybody. Any bear that thought they were going to catch themselves a crash. So they take it to where? They actually take it. We're going to throw these extension lines on here now. They actually take it to the extension line after your initial targets from the gray zone break, target 1, 2, then you got your extension line number 3. So you got target 3, which is up here. Look where they take it. Right to that target 3, they run it, a little bit of an exhaustion move to the top there, and then back down. Line in the sand next day. Here it is, got a double top. And then they corrected that whole move. The whole move was just based off a short squeeze, so it had to be corrected. So if you're looking to get in on the correction, you play this double top right at the line of the sand. Once that fails, a few levels were your targets. You had to target, again, gray zone low, gray zone number the break to the low, target 1, target 2. Where does it bounce? It runs the stops, comes right back to gray zone low. There's your trade right there. You can easily take this trade, 1 trade a day, you're done. So you take 1 trade a day, you're done, 1 trade a day, 1 trade a day. You don't need to take every one of these. You can wait for the perfect setups. And these are just lines that I had on here just from what I was watching. I was just going, look, hey, are they going to cup and handle this thing or break this back up? And if they don't, this thing's going to go way lower. It breaks the target 1, goes right to target 2, target 3 essentially, target 2, target 3, and goes right for the exhaustion level lower. There's actually additional extensions too. These are extensions, I'm sorry, these are the exhaustions. I'm sorry if I mixed the levels up there. Okay, so then talking about this whole move here, we had the short squeeze from the Bank of England news, then you had the correction lower. Where did we correct to? Right where the news came out, essentially, right? Then you double bottom there, or you kind of get a divergence there. So you got a bear trap here. So if you're looking at the lines, you're at an extension level, number 3. We haven't hit extension 3 at all, even on this move. And we would have if we didn't start at, target number 2 to the downside. So we started at 2 on the downside, went to target 3 on the upside, and then corrected back down to target 3. That makes sense to me, that whole move. Right to the Bank of England news came out. So then we're a little exhausted to the downside just because of where these lines kind of structurally the lines played out. Doesn't mean you don't go lower, but unfortunately, if you've been trading the markets long enough, it's really hard, very hard to short the lows into the next day, especially around end of the month and stuff like that. So what happens? Not everybody, but all the bears, late bears, get trapped here. They got to squeeze them out here. Nice little bull flag. But where does it go? Right to the top of the gray zone. Again, gray zone high. Where does the sell come from? Gray zone high. Probably a bull trap up here. Where do they sell it down to? Gray zone low. So you can see where these corrections are happening, and you can start to form sort of a pattern recognition system using the target 1, 2s, and then the extensions 3, 4, and then the exhaustions 5, 6. 5, 6 are going to be this one. And then you had the correction down. Bears were trapped here, probably a few left over after they ripped it. A lot of bears got out here. A lot of bulls got trapped. Those guys sell it out. And then those bears that were still here, they're getting out. That causes another short squeeze. Okay, that short squeeze catches a lot more bears, out essentially here, and a lot more bulls buying, and then they finally hit you with the move. The end of the day, of course, that's when they're gonna hit you with the maximum pain, and they take it all the way down to where? Target number 2. Once that gray zone low breaks again, they take it to 1, and then the momentum's so strong that they take it to number 2. and then you just run out of time. You probably would have ended up going even further because there should have been some sort of washout or something here given the context of this pattern, in my opinion. However, now we're moving into Monday. Monday is going to be a rebalancing day for a lot of funds, so it's sort of like you call it just 401k flows, pension flows, that kind of thing. So I would expect some sort of short squeeze again. A lot of bears going into the weekend, probably short, probably hoping for some Black Monday crash, which never comes when everybody's expecting it. So that makes no sense to do that. And so now we can go into the next day with a little bit of a bias. We're probably going to play to the upside, expecting these guys to get squeezed. So since we went to target 2, I could expect a target 2 at least to the upside if there is a true momentum move to the upside. So hopefully you like this video, and if you do, make sure to like, subscribe. I'll leave the link to the website to get a free trial for these T levels, and you get a lot of other indicators as well. And yeah, we'll see you next time. Peace.